Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bureau. Sorry, I had a hard time getting that one out. Today is Thursday, January 13th, and some of the news today here, of course, we've been kind of waiting for, is we'll start with the jobless claims. The economic news, jobless claims jumped up, kind of surprised everybody, so that kind of had the markets on edge there, kind of dropped, but we'll talk a little bit about that soon. Trade balance was kind of good. Actually, slight improvement. Negative 38.3 versus the prior month of 38.4 when they're actually when they expected to actually increase the trade balance, actually decreased a little bit. So that was kind of good news. Producer price index, it came up at 1.1%. Came over where estimate was, up a little bit from the 0.8%. But once you take out the volatility, this is the one we're kind of looking at, is the core, the volatility of the food and energy. Only went up 0.2%. So kind of in line, we kind of expected that, especially with the gasoline and everything else along that line. Tomorrow's numbers are going to be the ones we're really going to watch, the CPI, which is what is passed off to, if this is even passed off to the consumers. Wholesale doesn't always pass it off, so sometimes the margins are slimmer. So that's why we don't give as much credence to the PPI, but it's definitely something to watch. And the CPI tomorrow is definitely what we want to watch. And Michigan sentiment will be tomorrow, as well as retail sales will be all big numbers that could really make or break the bond market and, of course, stock market as well. Currently, the stock market's mixed. They had a successful bond auction over in Spain and Italy, and that's what's kind of helped offsetting the jobless claims on the stock market side of things. So that's what's kind of helping the stock market. It could be a lot worse because it did jump up quite a bit to 445 when we had, I believe this was even at 405 I think last week, and they increased. They must have revised it because I thought I remember seeing this last week a little bit lower. But anyways, so let's take a look here at the bond market. Bond market, we're having a nice little rally again. We were starting to close that gap that was created from the bottom over yesterday. We had a late rally yesterday due to the good successful auction we had yesterday, and then Fed's going to be having another auction or be participating in the auction again for 30 years. So let's hope that goes well as well. So we need, obviously, this to really kind of cut up more so we can get back in that range, that trend range. We'll probably need to be above the 99.75 or 100, be very close to the 100 range to keep in that trend line. So we really need to kind of shoot this up very quickly, or be threatened basically taking a big risk going downwards. So this kind of some bearish, even though this was kind of a bond rollover. If it wasn't for the bond rollover, we would probably be closer to the range we were before, the high 99, like 99.6, 99.7 range. So, all right, folks, we'll keep you up to date as to what's going on, but you guys have a great day. And meanwhile, mortgage rates have improved a little bit. All right, talk to you later.